Welcome back to my channel. Today we are going to go through another powerful strategy that we can use for our day-to-day trading. Whether you are a beginner's trader or a advanced trader, this strategy might be useful for you. So without any further delay, let's just go straight into the video. So as we can see on my chart, I have the first indicators on my main chart is moving average indicators, which is 200 moving average indicators, while the second indicator in my charts below is TDI RSI divergence indicators. So these particular indicators, first of all, the first indicators on my main chart is used to determine the overall trend of the market, in which I'll use this particular strategy to know whether the market is trending up or is trending down. So when the market is above 200 moving average, that means the market is trending up, so we'll be looking forward to buy only. And then when the market is below 200 moving average, we'll be looking forward, that means it's trending down, and then we're looking forward to sell only. So one of the things I use the second indicator, what we use the second indicator for is for signal purpose. We use the second indicator for signal purpose only, just to know where to enter the market and then where to be out of the market. At least that's what we use the second indicator for. So with trade, when it's below 200 moving average, you will watch your TDI indicators. Mind you, when it's below, you are looking forward to sell only, not buy. Sell only. So the market is below 200 moving average around this area, as you can see. So every time you see a sell signal in the TDI indicators, you will go for it. You will go for it straight without any issue. So one of the sell signal that I will see, at least when you allow the market to cross the 200 moving average, you should note that this area, this side, is change of character section. Change of character. When you see the market pull up, and then where the resistance is, and you see that the market break down to that resistance, it's a change of character at that moment. Even by default, that is a way you can put a trade at that particular place. You can set a sell limit at that particular place, and which it turn out very fine. So that's one of the strategies that you can use. And then there is a lot of indicators that indicate all this changing of characters. I think I will go through one of them in one of my videos, so that you can have the deep understanding about the price action, the rules, and everything. So let's now continue with our video. So one of the things is, as you can see, the market will sell in this particular area. Number one, our line touched the upper polygon band. That means the market is ready to reject. When it touched the upper polygon band, that means it's overbought, so it's ready to come down. So you wait for the line to cross down, for the green line to cross the red line. When it crosses, you go for your trade. At least from this place, you go for your trade. Why do you go for this sell trade? The reason why you go for this sell trade is because the market align. The overall market is below 200 moving average, and then the upper band, the line, the TDI line has touched the upper band line, which shows that the market is overbought, and you wait for that green line to cross the red line, which shows that we are trending, we are going down. So you go for your sell trade immediately. So how do you just go set your stop loss? You go for your sell, go for your sell, put it there. So your stop loss will be here, you can see. So what are you aiming? 1:2 minimum. 1:2. And there you have it. You have a very clean trade, no effort, nothing. At least the indicator do everything perfectly. So as you can see, when you jump into this trade, we have a buy signal here. Mind you, this buy signal, what will you do? You won't take the buy signal. you let it go because your overall market is below 200 moving average. So you let go of this particular signal. No, you won't take it because your 200 moving average is below the overall market is below 200 moving average, which is against our rule. So the next signal here is a sell signal. The market is overbought already. The green line has crossed the red line in the TDI indicator. So that means the signal is clear. And then we are below. So let's go for another sell trade. And then what is your target? 1:2, which is perfectly fine. So this is another set trade that went out very successfully. So these are the things. In order to filter out unwanted, you have to follow your strategy and follow the trend. Most of the professional traders, they say trade with the trend, not against the trend, because you have to follow what the big dogs are doing, not trading against them. How much money do we have that will be trading against the big one? No, now. So we should follow the trend with the trend. So let's go to the buy example. So as similar to sell example, it's just a vice versa of what we have been doing earlier. So you'll be looking forward for a buy signal. When you look forward for a buy signal, you make sure the overall trend is above 200 moving average. The market is above 200 moving average, whereby now you wait for your signal, for the TDI indicator to give you a buy signal, then you jump into it. For example, this is the perfect example. The market is oversold around this area. We are above 200 moving average. So when the market is oversold, the green one crossed the red, and even we get a buy signal. So you go for this particular trade. It's a perfect one. You go for it. See, you go for it. So when you go for it, your stop loss will be below 200 moving average. Then you target what? You target 1:2. Target ratio 2. If your stop loss is tiny, you can target as small as 1:4 when your stop loss is small. And then you can see the trade turned out to be a successful trade. But that's one of the things you have to understand. No, it's not that you'll be taking every trade every time. Just make sure you take that quality trade that your strategy provided. And then one of the things is, in order for you to become a professional trader, it's not that you'll be jumping from one strategy to another. You have to face one particular strategy and face it very well, and face it to the extent that that strategy will become the part of you, that even when you are sleeping, you know how to trade that particular strategy. But if you are jumping from one strategy to the others, you will be confusing your memory, you'll be confusing yourself almost every time. So stick to one and make sure you are perfect with that particular strategy. Let's go to the indicators, and then let's type moving average to our indicators. When you type your moving average, this is the first moving average is called moving average cross alert multiple time frame, which is made by chart art. Then just go into that particular you click on this particular one. When you click it, you will add it to your chart. So let's now go to the setting of this moving average indicators. Let's go to the setting. As you can see, this is the setting. The only indicator that I want, we have two moving average. We have the short period moving average, and we have the long period. So we don't have anything to do with the long short period. We only go to the long period. You change the figure to 200. Change the figure to 200. Then you go to the style. When you go to the style, you tick. You untick the short one. It will be like this. You untick it. When you untick it, you go to the bar color. if you need the back color, you can leave it there, but I don't want my my chart to be clouded, so I don't need that back color. If you need that back color, you can click it. If it depends on your own perspective. So then background color, if you want background color, you can tick it, but I don't want it. You can click it if you want. So that's all. You click OK. So you can see, at least when you follow that particular setting, you will have this kind of moving average that I have on my chart. So the second indicator, when you are the second indicator, go to the indicator section, you search for TDI Trader Dynamic Index plus RSI divergence. It is made by Zida chart. This guy, it is made by this particular guy. See that chart? You click it and add it to your chart. So when you add it to your chart, it will be visible. So let's go to the setting. I think I remember I don't change anything in this particular indicators. You can see this is the figure. You leave the figure as it is. You don't touch anything. You use this default setting. So you use this default setting, you press OK. When you press OK, the only thing you have to do with this particular strategy is just for you to expand. It may come so tiny, so you have to expand it so that you can see it clearly. So that's my guy. This is that ultimate strategy. Just set it up. One of the things is you just have to master it. And note, this is not a financial advice. It's not a financial advice. This is not a financial advice. Note that this is not a financial advice. This is for educational purpose only. So for you to use this particular strategy, do your own diligent study, research on this particular strategy before you put your money, before you risk your money on this particular strategy. So thank you guys. See you in my next video. Don't forget to subscribe, share our video, like, comment, and then if you have any strategy that you want me to work on, you can you can write a comment below this particular video. You can write a comment on it, then I will look into that particular strategy and do a video concerning that strategy. And then mind you, in my next video I will be talking I will go through a mobile strategy setup that we can use a MT4 mobile strategy setup that we can use, because I know it's not every one of us that have access to laptop or desktop. So without any delay, guys, see you in my next video. Bye bye.